Hey guys, today we want to have a look at what we still think is one of the most important trades out there, and that is small caps versus large caps. We're talking about equities here. Very simply, our case is that we are going to see a continuation of a trend we've seen pretty much all year so far, which is that small caps are going to outperform. Let's have a look in the on the charts, I should say. And the easiest way to look at it is where we do a lot of this stuff, and we've made a lot of videos on this before. This is relative charts. So what we took here is we took a couple ETFs. We took the IWM ETF, which represents small capitalization stocks, i.e. the Russell 2000, and we divided it by the S&P 500, the SPY ETF. And what you can see is that if you go back long enough, you can see essentially this has been an underperforming trade, meaning if you were overweight small caps versus their large cap counterparts for, let's say, the past 10 years, that has been a losing trade. And it was a particularly losing trade, ironically enough, in 2019 and really, even through 2020. So what we are seeing though is a what we call a sharp mean reversion or even a bullish reversal in many ways. So one way you can look at this a bit more closely is you can see how severely small caps got oversold versus large caps last year. We've seen a very sharp rebound, and we think what we saw last year was kind of an inflection point. So if you look at last year as an inflection point, and that's your thesis, as it is ours, you will notice that through a multi-year period, like 2, 3, 4 years, we've had this continued underperformance, and now we've seen a breakout in that. So what we've seen over the past few months, so from let's say March through right now, it's right now early June, we've seen a bit of a pause in this trade, as we've seen a bit of a resurgence as interest rates stopped going higher as quickly. The rate of change has slowed down for the time being, and we've seen some of the growth stocks start to pick up momentum, and we think that's been temporary. And we do think that small capitalization stocks have a good chance of outperforming. Maybe as a side note, and I've mentioned this now for, I don't know, a year and a half straight in almost every video, the major issue that something like the S&P 500 has is its market capitalization weighted structure, meaning that some of the very largest companies in the world, like an Apple, which are good companies, are crazily heavily weighted in those indices. So if those stocks don't continue higher at a decent clip, then the broader index has a difficult time going higher, which is why we think that underneath the surface, while there could be pockets of markets within the S&P that could go higher, the S&P likely is quite capped for the sort of in the broader sense. But back to the conversation of small caps versus large caps, what we really think here is that we're going to see a continuation of the trend that, again, we think has started to change last year, ironically, at the bottom of the pandemic, if you will. So let's have a look at the Russell 2000, and we're just going to look at the IWM ETFs just to remain consistent using ETFs for the analysis. And let's first have a real big picture look, and you can see that over time small caps have actually had a significant move to the upside. And one could argue that from a momentum perspective on the monthly chart, this thing's overbought. We could even draw some simple lines and make the argument that things are overbought here. And quite frankly, I wouldn't have had a problem with any of those, any of that analysis. However, the call here is not necessarily that we think that small caps are going to be a massive rally going forward. We think it's the relative trade. So let's quickly talk about the absolute trade though first, because I know everyone's usually more focused on the absolute trade versus the relative trade. On the absolute trade over the past few months, really call it since, you can go back as far as February of this year, the Russell 2000 has been essentially stuck in a range. It looks like it's coming to a head here and does want to go higher. So from an absolute trade perspective, if you want to be more near-term focused, I would not be surprised if Russell 2000 has another 10% upside. That would not be that hard to imagine. But I think really more interestingly to us is the trade in relative terms. So where you wouldn't want to be, let's say, long call options or just the Russell 2000 ETF itself, the IWM, versus being, let's say, net short or neutral the S&P. And it's a different trade where you're making two bets, but you could actually potentially pick up more alpha there than just being long, let's say, the Russell 2000. So we hope this makes sense, folks. Have a great day, and give us a thumbs up, like, and questions. If you have any, leave them down below. Take care.